Stella's an ASX-listed tin exploration and development company. The Heemskirk project's our main project, the focus for the company, and it's located near the town of Zeehan. So today, this is the order of events. So I'll talk briefly about Stella. I'll give a bit of an overview of tin. Peter actually gave a pretty good picture, actually, so I'll be endorsing what he said. Then I'll look at the project and how we've advanced the project since we took control of it in 2008. I'll look at some of the exploration potential, because I think there is a lot more tin to be found in this historic tin field. And then finally just look at what targets we've got ahead of us in 2014. So this is the corporate snapshot of the company. So 300 million shares on issue. We did raise money earlier this year, which has increased the shares, 25 million options. Currently capitalised at 13 million. We had $5 million in the bank at the end of March and no debt. The capital raising that we had in January and March this year raised 3.8 million. 3.4 of that came from a single investor, Cape Town SA. It's a Belgian private family investor, and they now have a holding of 20.8% of the company. Just a few words on Cape Town. The owners of Cape Town are a family that have been in the metal recycling business in Europe for over 40 years, and they've developed Métaux Chimiques, which is a tin recycler, and is responsible for it's the number 8 tin producer in the world. So we're very pleased to have them on board. They did look at a number of tin development projects around the world, and finally came to Stella. And they basically did that because they were looking, obviously, for something that represented good value. They liked the high-grade nature of the project, and they liked being in Australia. The other major shareholders, we've got a German family company that holds 15%, Bunnenberg family, and Resource Capital Fund with 12%. As a result of the new ownership, the board has changed. We've got Dr. Marcus Elsasser, who is a German-based financial advisor. He's brought a number of German investors to the company. He joined the board in June, and then more recently in April we had Mr. Miguel Lopez de Latona join, who represents the Cape Town investment. So these directors are very active, certainly don't hold back in providing their opinions at board meetings, and I think it's a very good complement to the Aussie directors we have with Phil Harm and Tom Whiting, both very experienced people out of BHP, and myself, who's been in mining and the finance industries. Okay, just on the tin price, it has been, I guess, has underperformed this year relative to expectations and some of the other metals, and I think it's really due to confusion that's been coming out of Indonesia. I mean, as Peter said, there is a trend amongst the incumbent producers of declining production. Indonesia's been a part of that trend, and it is an important producer. It's the second largest producer in the world. It's around about a third of global production, but they've been changing the rules in Indonesia. They're basically getting their producers to sell their ingot metal through a local exchange before it gets exported. This allows them to clip the ticket on the way through, which governments, as we all know, like to do. And as a result of that, it's created confusion. I guess producers have been holding back, wondering whether the rules are going to change. There's been stock coming into the market. And I guess if you look at the last couple of months of exports, I mean, that really, I think, has surprised the market that the metal's been coming on, particularly when the trend has generally been below last year's export levels. So I believe that's a short-term blip that we're going through. As the system settles down, we'll get back and we'll see that declining trend in production reassert itself. Just on the longer term outlook for tin, as Peter said, he had a very elegant chart there showing the deficit developing, and you know, I concur with everything he said there. The demand growth outlook is gradually improving. We have been through a pretty flat period for the last 3 years, and particularly 2013. So we're coming off a low base. The average growth rate and demand for tin's around 2.5% to 3%. So we're nowhere near that yet. So we've got further upside. It's going to be driven by solder, equipment, computing, autos are all the drivers behind that solder market. There's a myriad of uses of tin. There's always new uses coming on, and certainly some of the sexy uses I think get people quite interested in this sector. Latest one this year has been stannine, which is a 1 atom thick lattice of tin that a lot of computer chip developers are getting quite excited about because of the efficiency in which it transfers energy. So there's that happening. I think the trend in production is going to continue to decline from the traditional producers, and we do need new mines coming into the market. There's also, I think, some growing concern amongst some governments, the US and Germany, about where future supply is going to come from. The Americans in the past have built stockpiles to support their industry. At the moment, nobody has any stocks, so we could see them coming into the market as well. The fact that the small companies are out there trying to advance their projects during a period in which there's been a capital strike means that all these projects are being delayed. So we're not really going to see any major new production coming into the market for the next 2 years. So all of this adds up to the shortage we've been talking about. The analysts that are pretty close to the tin market are talking about $25,000 a tonne next year and higher, and we have seen it spike up to over $30,000 a tonne. So let me now turn to Stella. Stella's project, as I said, is near Zeehan. There's 730 people in Zeehan, and just about all of those families are somehow tied up with the mining industry. So it's a very good place to be looking to develop a mine. There's a lot of infrastructure there. The community needs more mining projects. The old 100-year-old Mount Lyell mine, you might have heard, has just closed, probably for the last time. So everybody's eager to get something happening, and we've got a Conservative government there that's right behind the project developers. With our project, you can see it's had a long history, starting in the 60s. We took our interest in 2008 with a 60% interest. We acquired a very good database of 90-odd drill holes from previous explorers, and I guess we've got, along with that, a difficult joint venture and some unflattering folklore. But since that time, we've made some excellent progress. We've bought out the joint venture partner, so we got rid of that joint venture. We have increased the resource, nearly increased it by 50% to 71,500 tonnes. We have demonstrated that some high-grade zones in the deposit, and we've showed that we can achieve 70% recovery in the metallurgical work we've been doing. So a lot's happened since we've had the project, and we've been able to achieve this with a fairly modest budget of $12 million so far. The Heemskirk deposit itself consists of 3 quite closely spaced ore bodies. The total resource is 71,500 tonnes, and I think the important thing to notice about the project is the grade. 1.14% is a high-grade tin deposit. The big increase was out of the Severn deposit, where we doubled the size of that with a very good drilling program. We've also added this year a smaller deposit called St Dizier. It's a satellite project located about 20 kilometres away. Slightly different style of mineralisation, so we're doing a lot of work at the moment on looking at developing how we would develop an open pit to mine it, and looking at the processing side of it. So that's been a good add-on. It's added 2 million tonnes of resource, so it's taken our total resource up to 85,000 tonnes, adding the 2 projects together. This is a grade tonnage chart, so it shows all of the tin projects that are listed on the ASX according to the amount of tin they have in their resources. And in our case, we're in a very good position. We're at the high-grade end of that chart. The only tin project that's got a higher grade is Renison Bell, that is the only operating mine in Australia. We completed a PFS, preliminary feasibility study, in July last year. These are basically the parameters from that study. So we we looked at focusing on a smaller mining inventory than the resource, so it's where we had more drilling detail at a grade of 1.06% and recovery of 70%. We can produce around 4,300 tonnes of tin a year in concentrate at a very competitive cash cost of $14,400 a tonne. The capital, if we build a standalone plant, is $114 million. So that's very much the base case. The economics of that is that at $25,500 a tonne, which we see as the marginal cost of tin production, the project has an NPV of 60 million, an IRR of 19%. So our focus since completing that study has really been to look at where we might be able to add more value to the project before we go into a definitive feasibility study. One thing we have looked at is the mine plan, how we might get into the mine a bit quicker than the work we did on the PFS, and also how we can lower mining costs. And certainly in the Severn deposit, we think there are stoping methods we can use there that would be able to lower our operating costs. Now that's something we need to refine once we get more drilling information, and that again is something we'll be looking at as we go through the year. This optimisation program can add a significant amount of value, as this list of attributes shows, that every year that we add to mine life, and the base life is 7 years, but every year we add about 13 million to the NPV. Deeper drilling of Queen Hill and the Severn deposits can add to that mine life, and certainly St Dizier, the satellite project, can add to mine life. The higher grade zones in Severn, I mean, if you can drill higher grades and thicker zones, that clearly adds to resources as well, so we are working away on that, and we're doing more on metallurgy. Just a few comments on exploration. I mean, I think we've got a wonderful exploration target around the known deposits. I mean, this is a very typical sulphide tin deposit, very similar to the Renison Bell situation. You've got a granite about 1 kilometre down that's spewing up mineralising fluids, up through fractures, and then the deposits are coming out up in the, well, so far we've found them in the top 500 metres. So our deepest drill hole is 500 metres. There's a zone between 500 metres and 1 kilometre that doesn't have a drill hole. Also around the tin mineralisation there's a halo of lead zinc mineralisation that the old timers focused on. So that occurs for 2 kilometres around the tin deposits. We have focused on the tin deposits that we know. There's not a hole in any of that or under that silver lead mineralisation. So again, another very good target. Okay, this diagram just shows the distribution of the tin. These are the 3 deposits, but the silver lead zone is a 2 kilometre zone all the way around here. The ability to look at, well, you can see from this cross section showing the 2 main deposits at Heemskirk that we've got drill holes at the bottom of the sections, and oh, there it is, all end in mineralisation. So these will continue to extend down, and we're at the moment looking at targeting those deeper zones. Again, just some examples of some of the good grades we get in the project. So, you know, when I say we can find higher grades, well, we have done in the past, and I think we will find more in the future. St Dizier is a satellite project. I won't say a lot more about it. It's a small deposit. It can add 1 to 2 years of production. The good thing is the higher grade mineralisation there is close to the surface, so it's a fairly simple open pit proposition. So the targets we've got in front of us: complete the scoping study on St Dizier, which we will be doing, I think, by December quarter. Extend the Queen Hill and Severn resources at depth and show the potential for further additions deeper down. Optimise the metallurgy. We've got a fairly large program on that going at the present time. Lodge a notice of intent. That actually starts the permitting process. Our plan is to do that in October, and then go back to the preliminary feasibility study and upgrade it for these developments. Following that, we go into drilling for a definitive feasibility study, which takes us into next year. So thanks very much for your attention. Tin in Tassie. If you want a copy of the presentation or do you want to talk a bit more about Tassie or tin, I'm in booth 33. Thanks.